So this morning, we're going to focus on cash, on the Ask the Expert session. So today, I'm really delighted to have Mike Almandras. I can never pronounce your surname. Almandras. There we go. Mike and I have been talking over the last few months, because Mike runs an accountancy practice that just focuses on the marketing and creative industry, the very same as Agency Local. So he sort of really understands the issues and the problems faced within our industry from a financial and accounting point of view. So I'm delighted to have you here, Mike.
Really, thanks for having me.
To turn over the floor to you, you know, the idea is that you give us some little hints, tips, etc. Because at the moment, you know, cash is more important than it's ever been for businesses to really have a deep understanding of that. And what again came out of one of the things, the talk from Sharon on Tuesday, was that if as a business you are going for some of these grants or these loans, then you're going to have to put forward a cash flow forecast.
Yep.
So that's why it's really important. So enough from me. Over to you, Mike.
Right. Well, thanks, Chris, and morning, everybody. So as Chris said, so I run my own accounting practice, founded last year, specialising in creative businesses. But prior to that, I actually spent the last 10 years working both in agencies and client side as well. So most recently, I was finance director for a 70-man PR and marketing agency. So very much have been industry side as well as now being on the practice side of things. And the way I'm going to structure this and sort of just run through is just sort of, you know, why we need to have that cash flow forecast now. And I think Chris has mentioned a few bits there. The cash flow forecast template. So there's a free template that I've put together and shared. In the chat box, I'll just put that there, our support hub, which includes links to the template. There's also a video that gives you the guidance on how to complete the template. We'll talk through some of that as well. And everything on that support hub also talks through some of the things that we'll cover off now, as well as links to, I think, other good resources, because there's a lot of useful information out there at the moment. There's also a lot of incorrect information. In terms of why we need that visibility now, obviously the world today is dramatically different from the one that we were living in and working in even 2 or 3 weeks ago. And the reason that we're sort of suggesting people focus on this 13-week cash flow rather than anything longer than that is purely because of the changing environment we're operating in. And it's that level of detail on a week-by-week basis that I think you need now, so that you've really got a clear view of your cash position. And it's about then being able to make informed decisions with regards to your staff, your suppliers, and yourself. But you can only really do that if you've got the clear cash flow in front of you, because otherwise it's just going to be guesswork, and you could end up making poor, ill-informed decisions as a result of that. So with regard to the template itself, it's a Google sheet that I've shared, and it's relatively simple to follow, and it's designed to work in that way, so that it forces you to look at each of the different line items within it and really make a judgment call as to how likely you think you are to get paid any of your outstanding invoices, how likely you think it is that any of your future work is going to happen, and then as a result, what changes, if any, you need to make to your outgoings, and what schemes you should look to take advantage of. So with regard to your inflows, and it's a case of just mapping out your expected invoices that are going to be paid by week, we recommend you should have phoned or been in contact with every single one of your clients. Now, I don't know the different sizes of your businesses or the number of clients that you have, but somebody who was a great client and a great payer 3 weeks ago isn't necessarily going to be a great payer and a great client now. And if you haven't spoken to them, I wouldn't assume anything around what the state of their business is. Pick up the phone and talk to them. Some of them might be absolutely flying. Some of them might be fine and say, look, yes, we can obviously honor the invoice for the work that's been done, but we're going to be putting other things on hold. And some may just be in complete trouble and there's no likelihood of them paying that. But you won't know that if you don't talk to them and find that information out. One thing you can obviously look at doing is for those clients that are struggling, you could offer some form of payment plan to them, because you would rather get something in than nothing in, with a view that they then, and I think we have to sort of almost approach this with, we will come out the other side of this. We don't know the timing of that, but it's almost, let's look at it on a 3-month horizon. So let's see what we can get from people now, and with a view that they would then settle anything outstanding maybe in 3 months' time, or when we've got a better picture. So that's sort of the first piece of advice on completing that cash flow, is to make sure that you've talked with all of the clients and really get a good idea of phasing it by week when those people are going to pay, because that gives you the clear picture of all the cash that is obviously going to come into your business over the next 3 months. Then you move on to looking at the various different cost lines, and these are broken out. For most agencies, staff costs are the highest one, followed by your rent, and then you're likely, dependent on timings, to have probably VAT payments. You'll have your PAYE, corporation tax, and we can talk about those ones, and then you'll have your sort of other software subscriptions and so on. So again, it's just about mapping this out, first of all, as if it was business as usual. Put all those costs in. If the next 3 months was just normal operating circumstances, this is everything that you would see going out of your agency. That way you've sort of got your worst case scenario. If you do nothing, this is what your cash position is going to look like. And that's sort of your starting point to say, oh, well, actually, if I do nothing, and with all of the costs, all the revenue I'm due in, my cash position is actually fine. But you're making an informed decision. And that's before you then start to look at what the various grants, reliefs, support available are. So, as I said, your staff costs, mapping that one. And all those other costs I just ran through. So once you've done that, you then, staff cost is the first one to look at in detail. And there's a couple of points on this. I think the first thing is around, what work have you got at the moment, and what do you need, or which staff do you need in order to deliver that work to the quality that you want it to be delivered to, or that the client is expecting it to be delivered to. Because ultimately, if the clients have paid for that, there's a responsibility to make sure that you're delivering what the clients have paid for. Then it's around, if there isn't the work there and you don't think that that pipeline is going to be coming in, who within your staff, and again, without knowing the sizes of your various teams, your 3 options really are, you can look at furloughing staff, and again, we can either have a conversation around with that. I'm not sure how much detail each of you knows, and that's something that there's been high level information around it, but the actual details and practicalities of it, and I think at the start of this webinar, we already highlighted various inconsistencies within it and how it will be applied to individuals. But you can furlough staff, i.e. put them on temporary leave, and you'll get 80% of the salary back from the government. You can look at changing their contracted working days. So you could move your employees from full-time to part-time. It might be 5 days a week to 3 days a week, or to 2 days a week. You might say to your employees, I've seen one instance where an agency has simply moved all of their staff to a salary of £20,000 a year, irrespective of what the role is. They've said, this is our positioning, we're all in this together, we are all going to move to this salary level. This, of course, has to be done within employment law and sort of employment contracts. So employees have to agree to these changes with you. A third option is you could just look at the redundancy option. If you genuinely feel that you don't have the work coming in, and that the timings of the support from the government, either through the job retention scheme, so this 80% support, or through the loans and overdrafts isn't going to help. Redundancy may actually still be the right option for your business. But again, it's about, by doing this cash flow piece, it will show you what the constraints are of the cash inflows and therefore what you've got available to your people. So those are kind of the three, I would say, the three different things for you to be considering here. Where we've seen this working well is for you as owners being transparent with your staff in terms of the challenges that your business is facing and talking to them, because of course, as owners, you're concerned about the welfare of your own business, which provides your livelihood. But of course, you're concerned about the welfare of your employees. You know, they're fully aware of the situation as well. And so, you know, it's would somebody rather have, you know, 3 days of paid employment, or would they rather have 80% of their income, but they're not allowed to do any work for you at all? Plenty of things to consider, but I think that the one for you guys as owners is ultimately you've got to make the right decision for the business. That's sort of the short-term perspective. The longer-term one would be, if COVID-19 and coronavirus hadn't happened, most of you would probably be saying, you know, if I asked you what your biggest challenge was, you would probably say finding, hiring, and keeping the right people. Sort of for agencies, that's typically one of the biggest challenges. So if you're able to have one eye slightly on the 3 to 6 month horizon, yes, there will be potentially a bit of a buyer's market in terms of bringing staff back in, because there will be people being made redundant, being laid off. But I think that employers who are in a position to be able to look after their staff now will be in a much stronger position coming out the other side of that. But again, that's sort of an ideological view. You need to have the cash in place to be able to do that. So there's a balance there. So on the cash flow forecast, what you would then be doing, so for your salaries line, is saying, okay, for next month, say I have 5 employees in March and I'm paying them the full amount in March. For April, I think I can furlough 2 of my staff members because I haven't got the work for that. And the government therefore is going to give me 80% of that back. We don't know the timings of that. The government has got to build, HMRC have got to build a brand new portal, which will probably fall over multiple times, as everybody will then be trying to upload, register their details for it. I think realistically, it's unlikely to see any cash from HMRC until probably either the end of April or probably May, would be my guess. And talking to other accountants and others, sort of even those who are sort of close to HMRC, they're saying similar things. So there are options in terms of how you fund that cash flow in the short term. One of those is to talk to your employees. You may find that your employees have got safety nets, you know, they've got cash, and they could say, you know what, we can actually tide ourselves over until you get that money in from HMRC. We're fine for you to do that. But again, that will be completely down to individual circumstances, but it's worth having that conversation, because rather than you rushing out to get a loan or go and rush and get other support, you may find that your employees are willing to assist you, but you'll only know that if you ask them. So what that will do, as I said, that will then give you, you've got your revised staffing position on your cash flow. And as I said, staff is typically, you know, somewhere between 40, 50, 60% of your overheads. So that would sort of take care of the main overhead of your staff and reflecting what your accurate cash position will look like. PAYE, the government is offering the ability for you guys to be able to use the time to pay scheme. So that's by HMRC, and in effect, you're able to defer paying your PAYE. That's not an automatic relief. You do need to phone them up and get that. And we're typically seeing that that's only being deferred for 1 month, possibly 2 months at a time. So it would give you some short respite But of course, dependent on your situation, anything that you can get could be welcome. So that covers, as I said, the salaries and the PAYE element. I think moving on, the next biggest cost for most of you will probably be the rent and rates side of things. Again, talk to your landlord. If you haven't already contacted your landlord, and I don't know how many of you have offices or work remotely, but talk to your landlord around, is there the possibility, and the sort of the order we're suggesting that you want to talk to your landlord is there the possibility of having a rent-free period with no clawback, i.e. they might just allow you to have a holiday with no expectation that that will be repaid. Then it's to say, can we have a rent reduction for a period that will be repaid at some point in the future? So you might say, can we just pay 50% of our bill for this quarter, and that will be repaid at some point in the future once we're out the other side of this. I would also say that you'd want to talk to them about the phasing of your rent. So most of them have been due this week, and typically they are quarterly in advance. You want to move yourself, if you can, to at a minimum paying monthly, because again, that will just give you a bit more breathing space in terms of some of your other costs, particularly your staff costs. Some landlords have been very open to helping their tenants. So for example, I myself had an email from my landlord yesterday saying, you know, we're actually going to offer you the chance to use your rent deposits that we hold to give you a 25% discount on your rent for the next 2 months, with a view that these will then be repaid by September. And that was the landlord had come and been proactive in reaching out. So that there are landlords willing to have those discussions. You know, there are other landlords where they've just said, no, simply we expect it to be paid. But again, you won't know unless you've had that conversation with them. And that's typically, after your staff costs, your next largest one. The rates relief, this should be automatic if you qualify for it. So everybody should have had, towards the beginning of March, a letter from your local council saying, you know, here's your rates bill for the year. And if you qualify for the small business rates relief, it would have said, you know, your rates bill is £3,000, here is, and then 100% relief. If that's the case, then you'll be eligible for the £10,000 grant. And again, the understanding on that is that that is a grant. You know, there's no requirement for that to be repaid. That money is being provided by the government to local councils, who then have responsibility for administering that scheme in each area that they're responsible for. So our advice is find your rates letter and look up on your council website to see what information they have posted, and just check back in on that regularly. Of course, one of the issues may be that the local council decides to communicate with everybody by posting letters to their offices whilst everybody is at home, and therefore we wouldn't pick up any of those communications. But that information should be on their website as well. And that, of course, is something that, as I said, as a grant, with it not needing to be repaid, will provide respite to a number of agencies who qualify for it. Again, without the clarity of how it is going to be delivered, there is still a risk. They've said beginning of April. There's a risk that we might not get the cash until the end of April. You might not get it until May, because as with all of these things, we're seeing the headlines from the government with support is coming and this is how we're going to do it, and then they have to get into the practicalities of how do you physically get however many payments of £10,000 to all of these businesses without, you know, having the appropriate bank details and creating the right audit trail and so on. So yes, you should qualify for it, but how and when that money will come is still not clear. So at the moment, I'm advising factor it into the cash flow forecast, but probably don't factor it in until the first week of May as a sort of pessimistic view, rather than assuming that that's going to come in the first week of April. Other costs that, let's go on to the other HMRC one. So as I said, I mentioned time to pay for for PAYE. It's also possible to use that for corporation tax. If any of you have got your corporation tax payment due in the next few months, again, you can apply to HMRC for that to be deferred using the time to pay scheme. The phone number is in the link that I sent on our support hub. They are being inundated with calls. So I've heard, again, stories of people spending 1, 2, 3 hours on hold just trying to get through to it. But they are, of course, they're overwhelmed because of the demand, but also they themselves will be understaffed because of people not being in the office. But that is one where if you've got that coming up, you really should just be looking to defer anything that you can. So as I said, the PAYE and corporation tax, you need to apply for those. VAT, no VAT payments are going to be collected for the next 3 months. So those that would have been paid on the 7th of April, May and June, HMRC will not be collecting those. That's an automatic relief, so you don't need to do anything to apply for that. But what we are recommending is that if you normally pay via direct debit, is that you cancel your direct debit with your bank, because HMRC have been known to get things wrong. And once that money, if that money has gone via direct debit, you will struggle to get that back because of the volume of queries that HMRC are dealing with. So we would definitely recommend that you cancel the direct debit on that one. I'm just seeing on the chat there from Chandeep, so some advice there on the time to pay helpline. Yeah, so the VAT deferral, they said they need to be repaid by April next year is when that would be due to be repaid by. It's one of those, although they're saying that you can defer the payment, you can also still pay it if you want to. Some businesses and some people will still rather not be in debt, even if there is the opportunity to do so. They would rather make those payments. So you can still choose to do that if you want to. Otherwise, the expectation is those payments are made by April next year. Again, is the latest guidance on that. So those are sort of the main pieces of support from HMRC. We've talked about the staffing, the rent and rates. The other piece that I'd suggest people look at is just those other costs that you've got going through, that all of your subscriptions, be it a good one is Adobe, for example, have been offering 2 months free on the Creative Cloud subscription, and some people managed to get it on the stock photography as well, I think it is. But it seems to be you almost have to go through the cancellation process, and then you'll get offered on a pop-up, will you stay if we give you 2 months free? This has worked for some people, not everybody. But again, any of those subscriptions, either that you still need, but you haven't had a conversation with them if they are doing any kind of discounts, then do. But you might also just find that you've got things ticking through your business that you simply don't need for the next 1, 2, 3 months. Just cancel those. You can always reinstate them if you find that you do need them. But again, dependent on what your cash position is, some of you may find that you do need to be looking at every single line item, and others may find that actually you can just carry on absorbing those. Jandeep in the comments again has mentioned that there's a piece of software called Float, which I actually recommend using to agencies. For any of you that use Xero, it integrates directly with it and they're doing a free trial. I would say that for this exercise, I actually prefer using the template that I've put together rather than using Float, because I think Float, you need to make sure you understand how it works, and it's reliant on some training, and it is reliant on information within Xero or within QuickBooks. And for what the information that you need now, the template that I've put together is entirely sufficient for that, and is far easier for non-accountants to use. And again, without knowing what each of your commercial capabilities are, some of you may find it overly simple, some of you may find it quite challenging, but it's designed so that it will allow you to look at it and get the information out that you need to make a more informed decision. So as I said, yeah, just revisiting all those other costs, what that will then do is you should now have a revised or cleaner looking cash flow for the next 3 months. And that will then start to inform you as to, does this look manageable? What the gaps are, because then your options are, you've either got to bring in more revenue and more cash, and that might be a possibility depending on who your client base is. I've talked with several agency owners where their agencies, they're seeing budgets being shifted towards them. They've had CMOs saying, I can't send all my sales guys off to conferences because no conferences are happening. So I've got events budget to repurpose into digital marketing. Depends on what the service is that you're offering. And again, I think back to that point around talking to your clients on paying the existing invoices is also talking to the clients and just understanding, is there anything else you can do for them now? They might even just be small things, but is there any other way that you can provide support to them? If you're unable to bring anything else into the business, the other ways of getting cash in are to look at additional funding sources. One other thing to consider is R&D tax credits, and whether if you've ever applied for them before, or if you haven't, whether you're eligible for those. So the R&D tax credit scheme is run by HMRC, but basically if you have qualifying expenditure, you are entitled to then get a refund or a rebate on your corporation tax. And typically HMRC will repay those within 4 to 6 weeks. There is sort of a technical process that you have to go through to make the claim. There are specialist firms that can do this for you, and typically it will be the fees that you pay are contingent on a successful claim, i.e. if your claim is unsuccessful, there is no risk to you. You're not going to be left with a bill at the back of it. So it's a fairly risk-free exercise, and the specialist firms will tell you quite quickly whether they think you have got a chance of making a claim or not. But the amounts involved can be quite substantial, dependent on, again, the size of your agency. So that's one thing that I'd recommend exploring if you think it might be relevant. The other thing, of course, is on the other thing to look at is on the funding side. There is a government scheme, the Coronavirus Business Interruption Loan Scheme. It just rolls off the tongue. Now, this is in effect just a repurposing of the British Business Bank loan scheme. All it does is there's extra support for the lenders. There's a bit of extra support for you as the borrowers, but you still have to go through a fairly formal application process. You're still required to produce sets of accounts, cash flow forecasts, a sort of pre-COVID-19, this is what our business looked like, a post-COVID-19, this is what our view is. And therefore, it's a source of funding, but it's not going to be, or it's unlikely to be, a quick source of funding. Again, depending on what your needs are, you may find that simply talking to your existing bank and looking at your overdraft might be the best way of covering off the cash flow needs that you have. I would, of course, caveat that, and again, talking with clients, as to looking at any sources of funding where you have a personal guarantee on that. Dependent on the viability of your own business, the last thing I would suggest to people is that you want to be extending borrowing, which you are personally guaranteeing at a time when you think there is the prospect that your business might not survive, because all you're doing is increasing the risk on yourself. So that's one of those things that only you as the business owner can decide, but you have to just be aware of that. Just jumping onto the chat and just looking at Anit's question just about PAYE. PAYE and directors of the company, yes. So this is one of those where the guidance isn't clear yet. We're hoping for clarity at some stage this week, because from a furlough perspective, you can only claim furlough if you are not doing any work. But if you're the director of the company, you need to be doing payroll, VAT, general administration of the company. So unless you completely shut the company down, by definition, you've got to be doing some form of work and therefore not eligible for furlough. This is something that has certainly been raised with HMRC, and I think has been raised, both by the accounting bodies and sort of a raft of accountants as well. Partly because it affects a lot of us as business owners as well, and we need clarity on that. So at the moment, we don't know simply. Some people have said, yes, we will qualify for the furlough scheme. Others have said, well, no, we can't because of how they've defined it at the moment. I expect it's going to be something that they will clarify in the next few days, because we don't know. And even the ICAEW have done a sort of very detailed paper on the furlough arrangements, and they think that it will apply. But that's just their assumption based on conversations they're having in the background with HMRC, rather than any explicit guidance that's been provided. So it is one of those we'll simply have to watch this space. And that's, well, certainly on our blog and on our website, we'll continue to update the guidance as that information comes out.
Right, can we get into Q&A? Shall I just sort of open this up to everybody? I see we've got Remini's got a question.
Yeah, absolutely.
Remini, you've got your question. Do you want to?
Okay, I'll verbalise it. Hi, thanks. Really, really helpful. I'm a solo business and a limited company, so not self-employed, but and I've lost a number of my clients. Well, they put me on hold for now, which is understandable. I have still got some. I've got some money coming in, but not enough to cover my bills or salary. And my accountant set me up, so I'm getting minimal salary anyway.
Yeah.
And then I pay myself dividends as and when, but that is not going to last at all. And so I just wondered whether or not you thought I'd be eligible for the 80% salary. I'm obviously not going to be spending a huge amount, but I do have costs to cover.
Yeah, so this is where we're awaiting additional guidance from the government, because as I was just mentioning there, whether directors are even eligible or not for furlough, because you would still be, if you've got invoices coming in, you need to be checking that they've been paid. By definition, you're working, and by the definition that they've put for furlough, that you can't do any work, you therefore wouldn't be eligible for it on that basis. Okay. But I think that, again, there's been a lot of conversations around the fact that a lot of small companies are set up in this way, i.e. there's 1, 2, 3 person, director owned companies where the salary is set at that minimal level, because then dividends are used. Some people will also argue, well, that's our choice, having decided to utilize be tax efficient with the way the system has been set up, to minimize the salary and use dividends instead, rather than taking a higher salary and paying a higher level of tax. I'm not about to embark on an ideological discussion here, but so we wait to see if the government is going to factor dividends into that, because of the risk with all of these things is that as soon as they introduce a scheme, people will be looking for ways to abuse that scheme, and for people to suddenly go back and maybe adjust, oh, that was a dividend payment, that wasn't, a director loan, whatever it might be. People will probably look to go back and maybe start adjusting things around in order to then take advantage of it. That's why by using the PAYE scheme, the government's already got existing data within the RTI where everything's being reported in real time. So it remains to be seen. I'm in the same position as you are with the salary side of things. So we just simply have to wait to see what they come out with.
Okay, thank you.
Anybody else got any questions?
I have another one. If no one else does.
Yeah, go ahead.
Can I just jump in? I'm sorry. You may have covered it, but I'm meant to be paying my corporation tax in May, 1st of May, and it's that will wipe me out.
Yeah, so phone the Time to Pay helpline.
Okay.
The link that I put at the start of the chat. So on our website, we've got a COVID-19 support hub, and there's a link with the phone number on there, or if you go to the government COVID-19 support page. You can get the phone number there.
Okay.
You'll again, when you phone them up, you can possibly be on hold for a while. I think Chandeep, you said you actually got through fairly quickly.
Yeah.
So depend.
12-month plan as standard. If you good reasoning, I had my second baby last June and took off 3 months paternity leave, and then pretty much wiped out any cash that I had. So instead of keeping the money aside, I had actually spent it, hoping I would get work in the future. So I was then owing 7,400 in December, and early paid off like 500 at Christmas, and then I didn't act on it in January or February despite chases. But when I phoned them last week with the pending amount, I was making small payments towards it, so they won't chase you for about 2 months in case you wanted to go down that route and you might not feel comfortable. But then at that point, I've now set up the 12 months for the when I phoned them, I gave them another £2,000 of, so I left myself 500 in business. But yeah, I've got like 500 a month coming out from March till next March for corporation tax.
Okay.
That's all the detail, maybe more detail than anyone needed.
Yeah, so typically, I mean, if you phone up, make sure you've got your information to hand in terms of your, the company tax reference number, company address, company registration number, sort of just arm yourself with all the information. And I think to Chandeep's point, you just need to be able to, in effect, explain why you've been affected or how you've been affected by COVID-19, and therefore why you need to delay the payment. They, of course, they are being far more understanding of these requests coming in than possibly they may have been historically. But that is something that, yes, you will need to phone them up in order to do that. And typically, we're seeing that they're certainly giving at least, sort of 1 or 2 month holidays, and then it might be that a payment plan is agreed so that can be staggered rather than taken just in one lump sum.
Okay. Thank you.
Michelle, I saw your hand raised.
Yeah, this is just more of an anecdotal thing, if I might share it, just because we're doing a community thing, so if that's okay. My neighbour last year ran into a real dip in his business, and it's not in marketing, but that doesn't matter. Anyway, he ran into a dip, and he told me he rang HMRC to talk to them about delaying a payment that was due, and he got a bit of a lecture, pushback from them about, well, lifestyle choices and all of this sort of thing. And actually, I think at the moment, first of all, they are far more open than they would be, as Mike's saying, and as is out there as a message. But also, I think in that case, push back again and say, it's not lifestyle payments that have caused this problem. It's payments of necessity and a drop in income that was in place before the virus, and basically get them on side. But I think those difficult conversations that would have been had before, people are far more sympathetic. And that backs up Mike's points totally, but it's just an anecdote from within the community. I don't think there is the standoffish finger wagging that was going on before. The other thing he's doing now is, because he's had this dip, he just sort of says, well, I'm self-employed, I am falling between the gaps of all these different assistance that are coming out. He says, and I understand this, he's been really reluctant to claim unemployment benefit because he didn't want to be getting money from the government. He wanted to be self-sufficient. His attitude has changed now because he's saying, okay, other people are getting money from the government, they're getting assistance from the government. This might be the only way this is the only thing that I fall into, fall within. And he's done that now. He's signed up online and he's waiting for a call. They say they'll get back to you within a week or something like that, to arrange a call. It's all by call, it's not in person, obviously. And I just think that's something that in our community, that might be the obvious route for us. It's something we've all tried not to do. But at the moment, if most people in our position or at work are getting government help, this might be the way that we get government help.
Yeah, and that's where we're certainly expecting, it's that group that we're expecting the government to address this week, is the self-employed but sole traders, so those who fall outside the protections that have been offered so far. I mean, the two groups that are, at the moment seem to not be covered are the self-employed, because it is just the universal credit, which I think is the £94 a week. But again, there are conditions attached to that, so you don't even automatically qualify for that. is my understanding. And then it's the directors of small companies where you're paying yourself the small salary and then dividends. Those are the groups that we're hoping they are going to address, but they're also the most challenging ones to try and come up with a scheme that, as I said, will be fair and help those people, but doesn't leave itself open to being abused by the unscrupulous.
Yeah, I mean, my neighbour was saying that he, in the last few months, and we've all been there, you know, if we haven't been there, we've been frightened of being there. He hasn't even been paying himself the minimum salary because his business has just been having, you know, any money that's in there or the overdraft facility has been going to paying insurance and IT support and new business costs and that's, you know, subscriptions, that sort of thing. And he's been going without. And because you work for yourself, you think, oh, well, there are periods when there isn't any money and whatever. And I think if he had been an employee and then been made redundant, he would probably have taken this measure sooner. So he's been putting it off. I just sort of think lots of people, it might be the option. I don't think it's brilliant. You get help with your mortgage and your rent or whatever. Yeah. It's not what we would want to do, but maybe it's the option.
Yeah, and I think then that is, you've made a good point there, and that was sort of the last piece in terms of the stages that we suggest the business owners go through. The last one of those is to look at your own personal cash flow as well. As you mentioned, you know, the mortgage payment holidays are something that most of the banks are offering, you know, 3-month mortgage payment holiday. You know, if that's something that's relevant to you, typically, again, for most households, it will be the largest outgoing. So certainly something that's worth looking at. Likewise, just any of the other subscription costs that you might have. You know, Sky Sports, for example, are allowing you to put it on pause because there's no sport on. But it's sort of, it's those kind of things that you probably, you know, people could go through their household expenditure and identify 1, 2, 3, 4 things that, oh, okay, I could reduce that down. But again, without knowing each person's individual circumstances, I'm sure those that, you know, are really sort of on the edge will have gone through and done that exercise anyway. I recommend people just check in regularly on the Money Saving Expert website, because Martin Lewis does some excellent commentary around all of the different schemes that are available. And, you know, rather than me sort of recreate the advice, I sort of, from a personal finance perspective, and just suggesting that people go there as the first port of call, because again, it's all just written in plain English, excellent guidance, and it will be updated regularly for things that you can be doing. Again, just things like, you know, looking at utility suppliers, broadband suppliers, all those kind of things. It's almost applying the same principles that we've talked through for the business to your own personal expenditure as well.
Yeah.
Brilliant.
I've got a bit of anecdotal advice as well. VAT payments, if you're paying them late, as long as you've got a plan in place, they don't attract interest. So I've only become VAT registered a year ago. But I was weighing up, should I pay off my corporation tax and should I pay off the VAT bill, which was smaller? And the time to pay person advised lumping both of them together and putting them in the plan, and then the VAT at the bottom of it so that it doesn't attract interest. So I'm incentivized to clear the corporation tax. I then asked them if it'd be possible to freeze the interest rate on that. They didn't get back to me, and hopefully that will happen, but I've no idea. If it does happen, great. If it doesn't, I might be inclined to pay off some of the 12-month plan a bit sooner, so that I'm not having to pay the interest.
Yeah, and I know again, with that and sort of payments to HMRC, I think, you know, again, being government backed, they will understand the fact that some people simply won't be paying them, even, you know, whether they've agreed the time to pay scheme or not, dependent on the situation of your business. You know, it's not something I condone, but I'm sure some people simply won't pay those bills and will incur the penalties or the interest charges, because obviously those will be added on to the costs that need to be paid. But it means that, you know, the cash hasn't gone out of the business. Now, of course, it's not something I condone. You know, very much you want to pick up the phone and talk to them and agree what that plan can be. But that's, you know, people will just be looking at what all their outgoings are and what the options are available to them. And I think within all of this, and partly why sort of wanting to, you know, you do that simple spreadsheet, you populate it, you then update it with all the things that are available to you, is it's about putting yourself in an informed position to then say, you know what, actually, the best route of action for me and for my business is that it gets shut down now without going into further debt. And I look at rebuilding something in 3 months, 6 months time. I wouldn't rush to do that now without clarity on what the measures are going to be for the self-employed and for the, the directors of small companies, and how that support will work. But it may highlight for some individuals that is in fact the right route to take. That's but why we're suggesting people do the exercise.
It just really just brings home the importance of actually managing the cash and using this as a like a model. So what if this happened? How would that impact things moving forward? I think the other point is the fact that it's something that you need to keep revisiting and remodeling based on changes in information. Once you've had that conversation with HMRC, how does that impact your cash flow?
Can I ask another question? I've got a loan that I got last year to help with various business costs and stuff, but I took it as a bit personal loan. Actually, it's not even a loan; it was a kind of a 0% credit card thingy. But do you think that it's like with Virgin or someone? Do you think it would be worth ringing them up and saying, "Can I have a break from paying it for a few months while this is going on?" Or do you think that they're not going to respond well to that kind of thing? Just give it a try.
With all of these things, don't make any assumptions about how any of your clients or any of your suppliers or any of your staff will behave. If you don't ask, you won't find out. And again, it's sort of one of those, we can almost all be our own worst enemies. We can talk ourselves into the fact that we won't get any support, or the suppliers won't give us a break, or the clients aren't going to pay us. Whereas, everybody, there is that sense slightly of in this, or from the majority of in this together, and larger businesses. So I had one client, she had one of her clients phoned her up and said, just to let you know, we're paying this invoice immediately because you can probably do with the support right now. And it's a bit like Morrison said that they were going to pay all of their suppliers under, I think, certain size. All of their suppliers were going to be paid on improved payment terms because they've seen an uptick in their business. So, as I said, it's just about having the conversations with them, and the worst thing that will happen is they will say no.
Yes. Cool. Thank you very much.
Excellent. Has anybody else got any other burning questions?
Just need to wait to see what comes out, I think.
Indeed. Okay, well that's been excellent. Thank you so much, Mike. I think that's some really good information there.
No problem. Happy to help.
Very logically put. So just I think it's really important that we just basically keep talking to our customers, our suppliers, our employees, and make sure that we're managing the cash.
Yeah, and another thing, sort of, outside of the financial piece, it's just important. Try and just not spend too much time on news channels or on social media. There's so much misinformation out there that actually, you can watch the news at 10 or something, like you can get your daily update, but aside from that, a lot of it is just information that isn't going to have a direct impact on you immediately, and probably isn't doing much for your own well-being. So, I mean, we've certainly found that we've benefited from not engaging with it for most of the day, and just checking in periodically, and just focus on the things that you can control rather than everything else, because to focus on the things that are outside of your control is a bit it's a bit like trying to boil the ocean. There's not much point to that.
Don't say that sort of thing. Next.
Right, that's brilliant. Thank you very much, and thank you all for joining. The next one of these sessions is going to be on Monday, which is focusing on HR and employment. So for those of you that got employees, a chance to put all your questions to an expert around that. So actually get down to the bottom of what furlong actually means.
Yeah, exactly. Is it 10 o'clock again?
Yes, it will be.
Yeah, okay.
I'll be sending information out about that soon.
Thank you so much.
Great, thank you.
Can I just, can I just say,
Thank you.
Anik, I think you're dressed amazingly, considering we're all working from home.
You know,
I'm so impressed.
any excuse to dress up, you know?
I'm thinking, wow, that's commitment to the.
We should all turn up in ball
I've got my
gowns
Jim
for the
Jam
next one.
bottoms. You know, so you can't see that.
Yeah, nobody stand up here.
Otherwise, I wouldn't bother. So here we are.
Well, you deserve a clap.
Thank you.
But yes, stay safe, everyone, and thank you.
Yeah, thanks very much. Thank you.
Take care.
Cheers. Good night.